Hi, everyone. Welcome to the webinar today. My name is Alexandra Alvarado. I am the Director of Marketing and Education here at the American Apartment Owners Association, and I am so thrilled to have you with us. We have a lot to talk about with our speaker today, Lauren. A lot is going on in the insurance industry. Unfortunately, some of it can be pretty disheartening, but Lauren is going to help us to come up with some solutions for what's going on in the insurance industry. And I think just getting an overall picture of what's going on is going to help you all make a better decision as to what your next move should be, because regardless of whether or not you filed a claim, these things will be affecting you. And so I think it's very timely to have an insurance expert like Lauren with us. Lauren has done several presentations for us on insurance in the last few years as we went through the pandemic. It's been very interesting to have you, Lauren, as a great resource for this. But before we get started, I just want to cover a few things. One is, as usual, we are recording this webinar, so we will provide you the recording tomorrow via email, as well as the PowerPoint presentation. And we'll also have some time at the end of this presentation for questions. We may go over the 60-minute mark if you have a lot of questions, but Lauren usually stays, which is great, to answer all your questions. So if you do have to leave, that's okay. We'll send you the recording so you can see the questions, but the Q&A portion I think is very valuable. So if you can stay, I would encourage you to do it. Also, we'll have some poll questions along the way and an exit survey as you leave, which I would love for you to take so I can get a better feel for what you thought of the presentation. And I'd also like to introduce Lauren formally, because even though some of you may have heard her speak, some of you may have not. So Lauren is with Insurance Hub. She's a senior commercial risk advisor. Right before we were on this call, Lauren and I were just going over how many years we've worked for the companies we work at. And we had a little bit of an update on here. She's been with Insurance Hub for over 10 years, and she specializes in advising clients all around the country in regard to their multifamily and other lessors risk properties. And when she's not helping her clients, you can find her fostering dogs for animal rescues and only occasionally keeping them. She originally hails from Ohio, but now lives in Georgia with her husband and menagerie of pets. So Lauren, you have so much experience in this industry with multifamily specifically. So this is just such a great time to have you on to talk about some of these changes. I'll let you take the presentation from here.
Perfect. Thank you so much, Alexandra. I appreciate all of that. And yes, I cannot believe it's been 10 years, but here we are. So I know everybody who is looking today and who will be looking in the future at this webinar, they're very interested in what the heck is going on in the insurance industry right now. We're definitely going through a bit of an upheaval. So today's topic is the perfect storm, problems and solutions to the rising insurance costs. So a little bit of background about me. I know Alexander already spoke on this a little bit, but I specialize in multifamily and rental dwellings and others lessors risks all around the country. I am based in Atlanta, Georgia. The agency was established in 1985, and we have over 20,000 clients nationwide. We are considered a one-stop agency, so business lines or commercial lines, personal lines, benefits, bonds, financial services, HR services, all the boring stuff. So today, of course, we're focusing on the commercial lines and the business insurance, and some of it might overlap with some personal lines depending on how many rental properties you have. So we can really handle anything. Now, as far as the objectives for our webinar we're going to review national and international events that are affecting the insurance industry. We're going to learn about hard market issues. What is a hard market? Why are we in one? And what can we do to get through it? We'll also go over some solutions that you can implement and plan for in order to guard your policies from controllable rate increases. We'll also talk about some good standard practices to reduce the likelihood of preventable losses from occurring at your properties, because of course, losses directly impact your premiums. We'll go over what you can do to keep your premiums as low as possible during the tumultuous time and going forward. So just some good tips and tricks. And as Alexandra said, there will be a Q&A session at the end, and I will also be listing my email address so we can answer any questions that go unanswered if we run out of time, or if the questions are maybe better suited for a member in our personal lines teams. Either way, we'll make sure that you get your questions answered. So first, what is going on? As most of you are aware, there's quite a bit of an upheaval going on in the insurance industry, and it's having a direct effect on the policyholders. So what's going on to cause this? Well, first, as just a general overview, multifamily alone is facing rates about 26% average up from last year. So we are currently in the midst of what is called a hard market, and that alone causes restrictions when it comes to dealing within the confines of the insurance industry. And we'll go over that in more detail next, but as a summary, we are truly in a perfect storm because a myriad of issues have converged to cause these rate increases. Over the past few years and further, we've had a very large increase in frequency and severity of natural disaster claims, which is the main culprit affecting the insurance industry premiums. So because of the steep uptick in natural disaster claims and that, hurricanes, storms, wildfires, it's getting increasingly more difficult for carriers to be able to predict the types of payouts that they will need to prepare for. There's also a rising cost of construction, which equates to higher replacement cost valuations on your policies and a longer time period to complete construction. So housing and labor cost increases have resulted in higher claims payouts for property and casualty insurance. The rising cost of construction materials and labor has led to higher repair and replacement costs for damaged property, which forces carriers to raise premiums to cover those increased costs. There is also some continued fallout from supply chain issues, which also leads us into some global inflation issues. Events around the world affect what's going on locally, especially with supplies that we obtain overseas and that are used in construction. So it is important to remember that inflation is not condensed only to the US. Inflation rates around the world are interconnected, and inflation rates last year and the year before were high in most developed countries, not just in the US, even though it does seem to be leveling off, which is good. Also, social inflation. So this is something that I get a lot of questions about as far as from landlords and property owners because of lawsuits. So when it comes to lawsuits, the US faces its own host of problems because of how litigious our country is. Overall, court cases typically result in high payouts favoring plaintiffs. Plus, there is a lot of systemic abuse when it comes to the US legal system. Higher court costs, attorney costs, increased attorney advertising efforts. So, of course, we've all seen TV ads, bench ads, probably heard radio ads. We've seen giant, large heads of people on buses that are advertising their attorney services. So because of all of this, personal injury court payouts have risen 319% since 2010. So social inflation is very real in the country that in the US because we have so many payouts due to some of them are legitimate lawsuits, but a lot of them aren't. But it's still, you still have to pay to defend yourself. So the claims payout for insurance policies also remain quite high because the cost to settle court cases is typically less expensive than letting it go to court. Again, I have a lot of clients that come to me and say, this is a bogus claim, trip and fell, but it was their fault. It wasn't anything we could do, which we totally understand. You might not have been at fault, but because of the society we live in, it's unfortunately a lot of the times cheaper to settle out of court than actually fight it. So that also results in higher claims costs. So yeah, insurance fraud and abuse. So false or exaggerated claims by policyholders, also bid rigging by contractors and contractors collecting money without completing work. These are other factors that all affect the social inflation. So as we're going to talk about a little bit more, new carrier requirements for properties deemed as acceptable risks have all changed. There are now more strict guidelines in place by a number of standard admitted carriers, and we're going to go over more of this in detail as well. So right now we're in what is called a hard market. What is a hard market and what causes it? So the hard market is an upswing in the market cycle that is categorized by high premiums, less competition, so fewer markets, stricter underwriting guidelines, limited market capacity, less favorable terms, and as it stands now, we are currently in the hardest market on record in the past 30 years. So yes, it ebbs and flows, but currently we're in definitely what is considered a hard market. Now, in a soft market, it's a bit easier to swallow those changes because it is categorized by lower premiums, more competition, so more markets available, lax underwriting guidelines, so underwriting guidelines aren't nearly as strict. There's more market capacity and more favorable terms in a soft market. Now, in a hard market, you'll specifically face many carriers who have decided to pull out of any problem industries altogether or putting further restrictions on potentially unprofitable policies. So as many of you know, such in California, Allstate and State Farm have pulled out of writing new business altogether. And I know after speaking to quite a few of you out on the West Coast, there are other carriers that are pulling out of the industry as well on a case-by-case basis. So many of you are likely feeling the brunt of the hard market directly. And there are a few other market changes that you should be aware about. So Nationwide, the company, was one of the largest multifamily insurers in the country. They have pulled out of writing multifamily altogether. They are no longer writing any new multifamily business anywhere in the country, and a lot of the current clients are being non-renewed. So a few of the other largest multifamily insurance carriers have now put age restrictions on buildings. So for example, Travelers. A lot of people have heard of Travelers. You might have properties with them or have had them in the past. They are no longer looking at properties with frame construction, so wood-built construction, that are over 40 years old. And that's still a little bit pushing it for Travelers. They typically don't want to look at anything over 30 years old. But if you've had a gut rehab, that certainly will change the pace. Berkshire Hathaway Guard. So Guard is a member of the Berkshire Hathaway company. They have also put a 40-year maximum age limit in place. Philadelphia, which they're 30 years now. So a lot of the carriers that you have maybe even gotten quotes from me before or other agencies could no longer provide you quotes if you have properties that are over 40 years now. So a lot of carriers are also excluding wind and hail coverage. So all the way from Texas up to Maine on the coast, if you're in a mile or two of the coast, or you'll implement a standalone wind or hail deductible and still charging more for it. So a lot of carriers are also now have access to proprietary models for things like fire scores and crime scores and roof scores, which is a new thing. So all of these, so fire scores, crime scores, and the roof scores are all proprietary models that the carriers use to determine the acceptability of a risk based on each of those factors. So fire scores, how likely is it that the property is going to be affected by wildfires? Crime scores, how likely is it that the property is going to face a crime in the future? Roof scores, that's a newer development, and it's something that a lot of carriers can somehow see the condition of the roof, and they can automatically decide whether or not it's acceptable or not to to cover a building depending on the condition of the roof, because a lot of insurance claims are because of roofs. So that's just something to keep in mind. Also, with claim trends in the industry, tenant caused kitchen fires, plumbing backups, slip and fall liability lawsuits. Those are also a big reason why carriers are either restricting or pulling out of multifamily. So Alexandra, if you could pull up the first poll question, that would be great. Okay, so what do you think the #1 cause of property claims has been in the past year for multifamily or rental properties? Is it water damage, fire damage, liability claims?
I don't think I know the answer to this one, actually.
That's okay.
I don't get the option to vote, though.
You
But
can,
I'm mentally voting here on what I
yeah,
think. But
yeah,
yeah, this is a good one. I'll give a little bit more
yeah,
time.
yeah. Take your time.
Mhm. All right, a few more seconds to get your
Yeah.
answers in. All right, let's see. It's pretty close
So where are
between
we?
a couple. All right, let's check out the results here.
Okay. What do we got? All right. Water damage. Water damage came in. Half of you guys think it's water damage. Fire damage at 11% and liability is at about 40%. And those who chose water damage are absolutely correct.
Okay.
So good job. Now, to be fair, all of you guys are correct. They've all been a part of multifamily claims. So don't feel bad if you didn't guess right. But approximately 70% of all property claims made in the multifamily industry last year were due to water damage. So water damage is a very broad type of claim, but it includes incidents such as the freeze that hit Texas, and that causes a lot of burst pipes, water damage from heavy storms and named storms. That all encompasses what we mean when we say water damage. Fire damage and liability claims were #2 and 3 on the top type of claims for multifamily. So still definitely something that you have to look out for and prepare for, but water damage was #1. All right, so a little bit about what's happening now with uh, natural disasters. 2023 marks the 5th consecutive year of higher premium costs, and a lot of it has to do with natural disasters. It's definitely the main culprit. So, of course, 2023, we're not done yet, but in the first half of 2023, we have faced about $110 billion in global losses. Insured losses are about 50 billion so far in the first half, which is up from 2022 at the same time that last year was at 48 billion in insured losses. So severe storms have accounted for about 70% in the total amount of insured losses. In the US, storms caused insured losses of about 34 billion, which is the highest ever recorded in a 6-month period. Now in 2022, the whole year, $270 billion in global losses, 120 billion covered by insurance. Now, out of that number, the US accounted for approximately 145 billion of total losses, 85 billion of which were insured. So about 75% of global insured losses occurred in the United States last year. Out of the entire world, US had 75%. 2021, 320 billion global losses, 120 billion were insured. And then 2020 had 210 billion, 2019 had 166 billion, 2018 and 17, 97 billion. So we definitely, in the past, 2020 to 2023 is the highest 3-year total payout for US insurance carriers in recorded history. So of course, because of that, there's going to be higher premiums. Now we're going to go over this in more detail in the next couple of slides, but it's very important to know how big of an effect the increase in natural disasters have had on not only insurance premiums, but coverages as well. Extreme weather events are definitely a main source of premium increases, though it's not the only factor affecting the insurance. It certainly has been the costliest. So where property insurance is concerned, insurance rates are not necessarily impacted by just local events, as they are the overall trends in any given industry in any geographical area. The rates that carriers set are typically nationwide, so the types of claims that are more prevalent in one area of the country will still affect rates across the country. It's just how the insurance industry works. Now, this is something I made last year, and you may have seen it in one of the Rent magazine articles published earlier last year or in a previous webinar. This is just an infographic on the most likely type of weather-related event that you'll face based on the area of the country you're in. Now, this does not mean that just because you're in one part of the country more susceptible to one type of claim, that means you won't face something altogether different. For example, you'll see that Texas is most likely to face claims due to storms and hurricanes, but that doesn't mean a blizzard won't come through and cause billions of dollars worth of damage due to frozen pipes and down power lines. So this figure also does not take into account what's currently going on in Hawaii. That wildfire, of course, has caused astronomical amount of damage. Since we're not quite sure of the extent of the damages yet, they're just not able to be factored in, but we do know it will have a heavy impact on the ability to write there due to it already being an isolated state. So when an isolated state or area is impacted by a large natural disaster, it's certainly going to cause issues finding coverage down the line. But hopefully the next webinar, we'll be able to update this map with a little bit more accurate claims scenarios. All right, so what to expect with your insurance. So we're going to go over the anticipated trends for the end of 2023 and into next year. So this is probably no surprise, but in case you don't know, expect rates to continue to increase due to previous year's claims trends. This is something all landlords should be preparing for. Rate increases will continue to offset the economic and social inflation losses, as well as make up for underinsuring a lot of properties as well. That is something that the insurance industry has been pretty on top of as of late, is really making sure that they are not knowingly underinsuring a property. It doesn't work out well for anybody in that case, but expect to see a bit more discipline when that comes in. So rates are also, of course, impacted because there's a reduction in capacity in a hard market, especially with buildings that are older and frame construction. So again, most carriers, standard carriers, have set new parameters in regards to the type and age of buildings that they will allow themselves to insure. So as discussed, buildings over 30 to 40 years, especially frame construction, will have fewer markets available to them due to strict underwriting guidelines. If you have a frame construction building that was built in the 60s, it doesn't mean that you can't get coverage, but expect it, depending on where you are in the country, it could go to excess and surplus lines, and it could have you could just have a much higher premium. It's just something to prepare for. But again, it depends on the specific attributes of your property. So that's something, of course, you can reach out to me if you want more advice on your specific situation. So expect rates to continue to increase due to previous year's claim trends remaining in a hard market. There is no sign that we are leaving this hard market anytime this year. It's very unlikely. So it's not something that you should hope for. Now, as far as renewals in the future, so if you haven't already been renewed this year, and even if you have, you should expect anywhere from a 10 to a 50% increase if you have a good loss history. And if you don't, so if you have a higher loss ratio over the past 3 years, expect anywhere from a 50 to 150% increase if you have poor loss history. So again, the rates will remain especially high for buildings with frame construction that are older. And the reason is because older frame built construction buildings are the most likely type of buildings to face damage. It's because the older building systems are more likely to break down and be affected by external hazards, and wood, of course, is most prone to catching on and spreading fire. Now, if you have a frame construction and you have a sprinkler system throughout the entire building, that can change things. So some carriers are making exceptions. If you have a frame build building and you have retrofitted a sprinkler system, then that's something that a lot of the main carriers will still consider. But it has to be throughout the entire building. It can't just be the parking garage or the basement. It has to be in every unit. So also expect carriers to require you to carry higher deductibles than before. So I don't know any carrier that's still allowing any new business to go as low as a $500 deductible, even $1,000. Most carriers are the minimum that they're wanting you to carry is $2,500. So depending on the area of the country you are in, you can also expect to see either separate wind and hail deductibles or just an increase in the wind and hail deductibles. Those of you on the Atlantic coast will not be surprised to hear this, but I am based in Atlanta, and we're 4 hours from the coast driving, and most major carriers in Atlanta are still requiring separate wind and hail deductibles. So as I mentioned as well, the reductions and restrictions in coverage types. So in a hard market, as we know, most carriers are putting further restrictions in place for coverages in order to remain able to write insurance. So like in California, the carriers that are remaining for new business are generally not offering high liability limits because of lawsuits. California is high when it comes to lawsuits. It's one of, if not the worst state for lawsuits at the moment. So where it may have been easier for you to obtain an umbrella for 5 million, I have a lot of clients that are asking for that. It's a lot more difficult because many carriers are restricting their limits to reduce their own liability in case of a claim. So expect that as well. All right, so let's go over some things that you actually can do. So it's not all doom and gloom. I know everybody is most interested in what you can do to obtain the most competitive rates. So the first is focus on safety. I always harp on this, and I always will. Make maintenance a priority. This is something that is completely controllable and should be a top priority for all landlords. Keeping your property well kept and clean is only going to benefit you. Make repairs before they get worse and more expensive, and before a claim happens. Always get ahead of the problem. So slip and falls are the major cause of liability claims for landlords. Most of these are due to when they're not fraudulent. They are most likely due to issues with the grounds, stairs, or surrounding walkways. So make sure you are doing regular checks on the grounds. Something I also encourage, because it's a fairly low cost, is installing security cameras so that if something were to happen on your property, it is easier to find out who or what caused the issue, so it is less likely to cause an issue again. You should also require your tenants to carry renter's insurance, but we have a whole slide we're going to go over that and we're going to touch on that later. Now, focusing on safety is not nearly as costly as upgrading building systems, but upgrading building systems, if you can budget and prepare for it, will absolutely help you, at least in the insurance side of things. So sprinkler system retrofitting. I touched on this before. If you have an older building, of course, this has to be retrofitted in. It's not cheap, but if you are in an area, if you have an older building, and especially if it's frame construction, and you might be worried about fire claims, which is certainly something that happens quite a bit. I don't know about everybody, but I can tell you pretty much weekly on the news here in Atlanta, there's an apartment fire. So if you can get a sprinkler system retrofitted in, absolutely it is worth it. Typically speaking, you get on the insurance side about a 10% discount if you have a 100% functioning sprinkler system. So while it might not be enough to offset the cost of retrofitting, it will still help you if your building does catch on fire. So it certainly reduce the impact that a fire can have. Another thing is central station fire alarms. So central station fire alarms are something that they're easier to put in existing builds. They are a fire alarm that automatically connects to the local fire department. So if the fire alarm goes off, instead of having to wait for someone to call the fire department, then this automatically notifies the local fire department. So that is also something that will help with the reduction in premium. Typically that's around 5%, but again, it depends on the carrier and what discounts they offer. So that's definitely something to look into as well. As far as upgrading building systems, every insurance carrier that I work with always asks if the property is older than 30 years old, what year was the roof replaced, the wiring replaced, and the plumbing replaced. So get that done as soon as it is needed, if not before. If you know that it's about time and you're shopping for insurance, make sure that that is a priority. If you have HVAC systems, so central heating and air, that's something that they talk about as well, but it's not nearly as important as the roof wiring and plumbing. So again, I'm not under any illusions that all of these safety features likely come at a too high of a price point to be immediately effective, but hopefully this will provide you some good goals to reach for, and maybe you'll end up prioritizing building safety features next time you're looking for new properties, so you don't have to retrofit and pay extra for the features. Replacing roofing, wiring, and plumbing also goes along with maintenance, but if you're updating to green features, many carriers are providing discounts for that as well, to make sure that your buildings are more environmentally friendly. A lot of carriers are offering discounts on that. So lastly, working with an agency that's specifically focuses on multifamily and rental properties like Insurance Hub will end up benefiting you in the long run. Specialized agencies, we have access to carriers that your local agent might not have access to, and those who specialize in your industry are up to date with what's happening in the market that could potentially affect our clients. So it's important to make sure you are working with an agency that is knowledgeable within your industry and has the ability to shop your policies around as coverages and markets change, as well as be a partner to you in order to make sure that you're keeping up with what's going on with the industry. Lastly, quick thing, know your claims history. That's something that you should ask for, especially if you plan on shopping. So ask your current agency or the carrier for at least 3 years loss runs. And if you are buying a property, ask for the loss runs as well. You want to see historically what, if any, problems you're likely to run into with properties. And if you're shopping around, asking for the loss runs is going to be necessary in a hard market to get any competitive rates. All right, so what to do? Prepare and budget for inevitable increases. Prepare properties for the most likely weather scenarios. Strategize with your broker to create a custom approach based on your specific situation. Get 3 to 5 years loss runs through your current agent or current carrier. Also have your agent provide updated replacement cost valuations, which I can run as well. So agencies have access to programs that can calculate the replacement cost of any given building based on certain structure information, so square footage, type of materials used, area, things like that. So knowing how much the true replacement cost is will help you decide, if you have the flexibility to choose between replacement costs and actual cash value, what's going to be your best bet going forward. Also, adhere to any outlying loss control recommendations. And I put recommendations in quotation marks because, as you probably know, recommendations are not really suggestions, they're requirements. So that's something that you want to make sure you focus on. Is insurance carriers don't want to pay claims. That's not news to anybody. So what they're telling you to do will prevent claims from happening. Even if it seems very nitpicky, because they don't want to pay claims, they are telling you what to do to prevent that from happening. So take those seriously because they can absolutely be helpful. So just a couple of pro tips to consider moving forward. So again, before closing on any property, I'm changing it from 3 to 5 years because over the past few weeks, it's been evident that 5 years is becoming the standard. Request 5 years from loss history from the current owner. So if it comes back, you get the loss history and there's proof of clean loss history, it's better rates for you. If the loss history is not clean, you can always use it as a bargaining tool when purchasing the property, get ahead of known potential issues that the building or management has faced in the past. And for older buildings, so over 30 years, please also make sure you find out what year the roof, wiring, and plumbing were last replaced, if they know. Not knowing what you will have to face in terms of property investments will come back to haunt you. And I know new roofing isn't cheap, and bringing aluminum wiring up to code is even more expensive, but an unexpected and large cost can sink a lot of people. So make sure that you protect your assets by finding out the full picture of what you're buying, and loss runs can absolutely do that. The presence of any of the following are going to automatically make you ineligible for standard insurance coverage. This is probably something not many of you have to worry about, but just in case, I wanted to include it. Aluminum wiring, absolutely automatically kicked out of standard markets. Polybutylene piping or plumbing, blue plumbing was really used in the 80s. So it's not as prevalent anymore. I do have clients that have that, and it causes a lot of claims, but it's something that you should know if you have. Wood burning fireplaces, again, we've talked about fire. Tenant caused fire claims are big. Wood burning fireplaces are typically a no when it comes to standard carriers. If you have high vacancy rates, because there's not people there to see what's going on in the property, most carriers are not going to want to see that. High crime scores, high claims history over the past 3 to 5 years, any frame buildings over 4 stories without a sprinkler system or central station fire alarms, and also coastal properties. When I say coastal, I mean East Coast, so Texas up to Maine. West Coast has its own set of problems, but hurricanes and named storms is not one of them. So that's something to keep in mind. All right, lastly, I want to touch on something that is continued to be brought up by lots of my clients, and I think it's certainly worth spending a minute on. So should you require your tenants to carry renter's insurance? The answer is unequivocally yes. As the landlord, you are absolutely allowed to require your tenants to carry renter's insurance, either in terms of a new lease or a renewal. There are many benefits to requiring your tenants to carry renter's insurance and not many drawbacks. So, of course, it protects your tenant's personal property, which is a big benefit to your tenant in case there is damage to the tenant's belongings due to a covered cause of loss. But it also protects you as the owner against negligent destruction of property. So if a tenant causes damage, you as the landlord have a course of action to take that does not hit your main insurance policy. A lot of it provides dog bite liability. Of course, you can weed out undesirable tenants. It helps with relocation expenses in the result of damage that makes one or more of the units untenantable for an extended amount of time. and it can lower the chance of your insurance increasing due to a claim caused by a tenant because it reduces the risk of a lawsuit against you. So between the claim and your policy, a renter's policy in the middle can take the brunt of what's going on if it's the tenant's fault. Of course, it doesn't remove all liability from you as the landlord because you are still absolutely liable for upkeep of property and maintenance. But if something happens and it's at the fault of the tenant, you should not have your policy as the first line of defense against that lawsuit. It should be the person at fault. So regardless, if you are named in a lawsuit because of a tenant caused issue, then you have that barrier of coverage between the claim expense and your policy. If every landlord required their renters to carry renters insurance, there would not be nearly as many claims flooding the industry on the multifamily master policy side. While it's certainly not the main culprit for rising premiums, master policies paying out for claims that should have been covered by a renter's policy has certainly been a factor in premium increases. So this is how to reach me. And as you can see, this is my assistant, Gus. He is not very helpful in the insurance industry, but he's very cute to look at. So if you need to reach me for any reason at all, you can email me or call. And then Alexandra is putting up a last poll question.
Yes, I think this is a easier way to connect with Lauren. What I can do, if you say yes, I'll send your info to Lauren directly after this call so she can reach out. Essentially, whether you're looking to switch now or just want to know if you have a good policy. Lauren and her team are really good at just analyzing it. They'll do it for free. So it doesn't hurt to at least know if you are getting the best rate. I know a lot of you mentioned, I saw Farmers in the chat. There are so many other options especially in like specific markets that could be a lot better than going to a Farmers. And apparently, I forgot who it was who said it here, but they were saying that Farmers isn't even taking multifamily. They're outsourcing it to something else anyway. So, I mean, just makes sense to work with an insurance broker who actually does things in multifamily. And if you are investing in property at all, like Lauren said, and you're trying to like get a new property, you must know what is on that 3 or 5 year report, because it will definitely impact your costs. And I think that is more true now than ever. Having any loss history is definitely going to be, hard to maintain. I mean, it's a cost you may not account for when you're looking at an investment property.
Yeah, and something to that too is I have a lot of clients or not clients send me their policies just to say, is this okay? Because I don't want to waste my time and I don't want to waste your time, but I do want to help. So even if we can't help you for whatever reason, because not any one agency has every single market available, I will absolutely still tell you what to look for and what to ask for. So yeah, that's just something to keep in mind. And I did, since the next slide is questions, I do now see a lot of questions that were asked in the chat. If you don't mind, I'll start with those.
Yes, absolutely.
The ones that I can.
Okay. I can go ahead and keep track here for you.
Perfect.
I think the first question, which was interesting, is, I don't know if you've heard of it, Lauren, SB 326 and 721. It's the new law in California where they're requiring apartment owners to have their balconies inspected by 2025. And they're wondering if there's a consequence if the insurance companies in California will be asking for that inspection report. That's
a good question. When it comes to inspections, typically if they want to see it, they'll go see it themselves. Now that could very well change, but because of course, the hard market, and we didn't even touch on the Champlain Towers incident in Florida, of course, that the collapsed multifamily buildings. Inspections are absolutely key to making sure that the property is safe. So I don't know enough about the law to know if it's going to be costly to get that service done, or if is it just someone just coming around and inspecting it. But I am going to assume that the insurance carriers are certainly going to ask probably for at least photos to make sure that it's safe, because of course, if something happens with a balcony and it collapses, it's a big problem. So
Yeah, absolutely. And we've seen that. I mean, that's the whole reason that law was
mhm,
passed. So let's see
absolutely.
here. For the sprinkler system that you mentioned, does it have to
Yeah,
be in each residential room or just the hallways?
it has to be in the rooms. So
Mm,
not just hallways.
wow. Okay.
Yeah.
No wonder that's a bit pricey of an
Mhm.
upgrade, but it could be worth it.
It is. Yeah.
Yeah. Okay.
Your building probably won't burn down
Well,
if you
that's
have
for
a sprinkler
sure.
system. So
Yeah.
yeah,
I can see why insurance companies will reward you for that one.
absolutely.
What is the difference between renter liability insurance and does it include any coverage for pets? So I think they put pet insurance, which when I think of pet insurance, I think of, the insurance that I pay for my pet when they get sick.
Right.
But I believe what they're trying to get at is how it covers any sort of pet issues.
So dog bite liability,
Mhm.
that's really what a lot of renters insurance policies will provide coverage for. And then there's usually, it's going to be a sub limit. It won't pay out to the full limit. But if you have pets, even if you don't allow pets and someone has a pet, um, if the dog, it's typically a dog because cats, I mean, I guess they can scratch you, but it's not, dog bites
More
can
common.
put people,
Sure.
yeah, and they put people in the hospital or worse more often than anything else. So if you allow a tenant that has a dog to attack someone, um, that either is visiting, so like a UPS driver or a
Mm,
mailman or just a visitor, that is certainly something that you would want the tenant to be responsible for instead of you, because it's not your dog.
absolutely.
Yeah.
Right. And then it could go through their own insurance. So you don't have to
Yeah.
deal with that. Hopefully that insurance will cover it. So, I mean, this
Yeah.
Nataya was saying here that they have liability coverage between 1,000 and 10,000 for the pet liability. So I guess choosing that option or requiring your renter to have that option in their policy, I mean, you could decide what amount makes sense, I suppose,
Yeah.
if you're allowing pets, especially. Okay, copy of
Yeah.
presentation will be sent to you all tomorrow, as well
Great.
as the recording. What happens if the tenant has renter's policy and does not keep it up? How will a landlord know?
Good question. And this is something I wanted to talk about too, as far as the renters policies,
Mhm.
because I did see there were a couple questions about renters policies and uh, obviously, so I did see a question. Tony asked, how can requiring renters insurance weed out tenants? If renter's insurance is not expensive, it's typically something that you could bundle with, with your auto. If you're in a city that has autos, a lot of heavy auto traffic, or even not, it's still maybe $15 a month. So it's not a big expense. If they are unable to pay for that, then it's likely, there could be other payment problems with the tenant as
Right.
well. If they're not able to or willing to pay for that, they still have their own liability as a tenant. So it's something they should understand. Now, in order to prevent issues from happening, there's a couple different options. So one option is, and I always encourage this, make sure that your tenants add your entity. So if you're an individual, add your personal name. If you have it under an LLC or corporation or trust, add that as an additional insured on their renter's insurance. It is a very normal request. It is very standard. Any industry asks for that. So even if you're a contractor or you do anything, asking to be named as an additional insured is a way to make sure that you are notified if their policy cancels. So that is one way to do it. is making sure you include yourself as an additional insured on the renter's policy. The other way to do it is there is something called a master renter's policy that you can carry as the landlord on behalf of the tenants. It's not as all-encompassing as far as coverages go because it's less specific. I do have clients that they say, it's like chasing toddlers around, trying to get people to provide proof of renter's insurance, and they just don't want to worry about doing everything else. So they take on the cost and then just pass it along to their tenants. They just build it in. So when you do it on a larger group basis, we don't need things like the tenants' names or anything. We really just need to know how many units and the coverage amount that you're looking for. And then if there were to be a claim, that's when we would need to collect the actual unit, the tenant's information. So it's a path of least resistance, especially if you have a lot of units, but it tends to be a little bit less as far as, with rich coverages that we talked about. Renter's insurance, especially on the tenant side, they might want more. And if you have a tenant that, maybe you have a 100-unit building and you have like 20 that are super great at keeping you in the loop, and you have no problems with them as far as providing proof for renter's insurance, you can just get it on the other 80. You don't have to it's not an all or nothing. So if you have some problem tenants, then that's something that you can look into as well. And we definitely provide quotes for that. But it is a cost that you would have to incur. You have to take it on, and then you would just pass along that cost. You'd have to build it into the lease, either
Gotcha.
renewal or,
Interesting.
Yeah.
Okay.
Yeah.
Well, is there a recommendation for renter insurance company?
To tell your tenants about to do individually, I mean, there are so many renters policies out there. I would just make sure that they're A-rated or better, that they have a good rating and a good financial backing. That's really it. Now, if you want specific names, I can ask the head of our personal lines department, who they tend to choose, and a lot of it'll also depend on the area of the country too, what carriers will be eligible.
Yeah. So Todd, referencing the SB 326 answer, just so you know, Todd, we're going to have a whole other webinar on that law. And so I hope that you'll attend that one to get more information for it. It is new, so it's hard to say how insurance companies will be taking that into consideration. Either way, you should be doing it, because if you don't, there is up to a $500 per day fine of being in non-compliance in California. So we'll have more information for that in the next month. I'll send you an invite to that webinar separately. James asking, do you have to work with several agencies to get the best policy, since individual agents do not have complete access to the entire insurance market? I had to work with 6 agencies to get coverage. It is a terrible system. Why is there not a national exchange of admitted and non-admitted carriers?
That's a great question. And to answer your question, the way that it works with a lot of insurance carriers, and I'm talking about standard admitted carriers, I'm not talking about excess and surplus lines like your Lloyd's of London or anything. When it comes to standard carriers, your Travelers, Nationwide, Hartford, Cincinnati, Safeco, all of those, when it comes, so agencies have to commit a certain amount of money to each carrier in order to have access to them. You can't just be like, hey, I'm an agency and I want to use Travelers, so here's my license and we're good. That's not how it works. You have to commit a certain amount to a carrier in order to have access to their program. So for those agencies that don't specialize in multifamily, they won't have a big enough book of business to commit to the carriers specializing in multifamily that require a certain amount of business, or there's not like a monetary penalty. They just won't work with you anymore after a certain amount of time. So as far as a national database, that's probably why that's not an option, is because each carrier is governed independently of the others. Now, there are, of course, some common factors as far as having to abide by state rules, and you know, there are insurance commissioners for every state and on the federal level. And so while it sounds like a great idea, and I would probably be for that, unfortunately, it's not up to me. So
Yeah.
when yes, insurance can certainly make things more difficult than they need to be, and it's a slow moving industry. Just like, you know, working with a lot of governments, it's a lot like pulling teeth, and they're resistant to change. But that's having to go to 6 agencies, though, is extremely excessive. I think any more than 2 is going to be excessive, especially in this market, because the other part of shopping is agencies have the ability to block other agencies from quoting. So if you go to 6 agencies, they're all going to block each other from being able to access a market. So that means, let's say you want to go to Travelers, and the other agent, that you have 2 agencies shopping and they both approach Travelers. The first agent to submit the quote request to Travelers blocks it for anybody else.
Mm.
So,
Yeah, because
and that
Travelers probably
has,
doesn't want to do all the work of,
no, they don't.
yeah,
And
doing it over and over
legally,
again.
they do it over and over again, and
Yeah.
legally they can't offer different quotes to different agencies. That's
Mm.
not fair either. So while there are a couple markets that don't block, but working with them is such a pain. And I mean, of course, underwriters, it's not up to them, but they don't like it either. It's just something that
Mm.
but at the end of the day, you still have to match up and make sure that uh, the costs are the same, the coverages are the same. So it's a big pain.
Interesting. Well, I learned
Yeah.
something new. I didn't know it worked that way. That definitely
Yeah.
explains a lot.
Yeah.
Okay, well, let's move on with a few others here. I know we have a
Sure.
ton of questions. Peter asking, how would switching a single family house from long-term rental to short-term rental affect coverage and premium?
So there are a few carriers that will allow you to do short-term rentals. So if you're doing Airbnb or VRBO, there aren't as many options for insurance carriers. They exist, but there just aren't as many options for you. And typically, because of the turnaround with renters, you're not having one tenant a year, you're having, 20 or however many. That's a higher liability risk, so it's a little bit more in insurance. So, I mean, again, it depends. So much of it depends on the actual individual property and the geographical location and the structures and everything. But for the most part, it'll be a little bit harder to get coverage for rental properties, but it's certainly doable. I have a
Mm,
lot of clients that have that. It just, if you have a coastal Florida rental property, you're gonna pay a lot of money. So
yeah,
especially if it's short term. But of course,
yeah.
it's Florida, so you want short-term renter. That's where it goes. So
Ah,
I know it's not uh, super straightforward, but changing it from annual, I mean, if it's the best option, you can absolutely make it work and absolutely find an option for you. It's just
yeah.
expect to pay a little bit more.
Yeah, and for those of you getting into the short-term rental business, I know that's popular
Yeah,
nowadays. So it's something to consider there.
absolutely.
Yeah,
We still definitely have options for you.
great.
Yeah.
Kai was asking, when you say multifamily, you mean
Mhm.
5 units plus?
Yeah, great question. I did see a couple of these, like what constitutes multifamily. So
Mhm.
multifamily, and I saw someone say like 2 units. It's technically 2 units is multifamily because there's more than one, but multifamily in general typically means 5+ units per building. Now there are a couple carriers that we work with that think 2 units plus is multifamily, and that's fine too. But historically speaking, it has been 5+ units
Okay.
that have been considered multifamily.
Kai and Jackie both asked, what is a loss run?
Great question. So a loss run or loss history means the same thing, is a actual physical report from the carrier that you've been with on how many claims you've had, if any. Now, I've had the most common comeback I've had is like, well, I haven't had any claims, so I don't have a loss run. You do have a loss run. Everyone that has an insurance carrier has a loss history or a loss run. It just might be blank. We want it to be blank. So unfortunately, especially during a hard market, carriers don't just take our word for things. If I'm like, no, they haven't had any claims, well, that's great. But that either I could, well, it's very unlikely that I would actually knowingly lie to someone. I would never do that. But they have run into things like a client has lied or just not remembered that something happened, or it was a
Mhm.
previous issue that they didn't remember. There's a lot that the carriers want to see, and physical hard copy loss runs or loss history, again, same thing, is going to be beneficial, especially if you don't have any. So it's written proof that you haven't had any claims. If you have had claims, then it will show you when the claim occurred, what type of claim it was, and how much was paid out. So that's something that if you you either ask your current agent for, or if you have a portal with the carrier that you've been using, then you can log in and request it yourself. And if you have any specific issues with it, legally required, if you ask your agency to do it, most states they have to send it to you within 30 days legally.
Nice.
So if that's becomes an issue, we can always step in and help. But if we are not your agent of record, so any agency that is not on file as being your agent on record cannot access your loss history. It has to be done through you. So
Mm.
your current agency can access that because they are your agent of record. So they have the ability to pull it. It's because of privacy laws and everything. Carriers just won't release loss history to anybody, which is maybe one of the main gripes with any insurance agent, is not being able to pull loss history on the commercial side, because on the personal side, you have what's called clue reports, and you can pull them and it's easy, but on the commercial side, they just make it a little bit more difficult. So,
Mm.
but if
Okay.
you ever need help, you can always just reach out and ask. I can tell you how to word your request.
So Morris is asking, does a single 2023 claim constitute a poor 15-year loss history?
Great question. It depends. It's, is the claim, is it is it what's called a shock loss, which you've had one claim in the past 15 years, and that you can prove that it's only been that one claim, and it was, something that you've, depending on what happened, that you've taken steps to prevent from happening again, and that, you've put safeguards in place, then no, the carriers very well might make an exception to it, but I would need to know more about the loss and the amount of payout versus how much you're paying in premium, because the loss ratio is based on how much has been paid out in claims versus how much you have paid in premiums to know whether or not it would be favorable. But typically speaking, a carrier would rather see one shock loss in a 10-year period than multiple smaller losses, because they don't want frequency. Carriers would rather have one big loss than a few small losses, because frequency constitutes a pattern. And if there's a pattern of claims, then the carrier will assume that they will have to pay out claims as well. So that's
Okay.
something to keep in mind.
Yeah,
Yeah.
interesting. Another question here from Philip. What's going on with the umbrella market?
Well, Philip, that's a good question. It's going through an upheaval just like everything else. With umbrellas, it is, so umbrellas have to follow the underlying whatever liability policies you have. So whether it's general liability, employer's liability, which is workers' comp, auto liability, anything like that. So anything affecting the underlying liability coverage, because you can't just have a standalone umbrella. An umbrella has to go over another policy. That's, if you picture an umbrella, it has to go over something to protect it. So if you're having issues with your underlying liability policies, then it can certainly affect your umbrella or excess limits as well. Now, I think I mentioned this before, like in California, I've had multiple carriers this time last year. I could write a $5 million umbrella for them and it was no problem. And this year they're like, oh, it's California, we're maxing out at 1 million because of the lawsuits. So it's just not something that that's super flexible right now. I do have other markets for higher limits, but that is, if you want higher than $1 or $2 million in umbrella or excess liability, I and any other agent that isn't your agent of record will need, I would say, 5 years general liability loss history to show that, because you're looking for an umbrella which goes over the general liability. In this case, I'm just talking about like multifamily, that there have not been any underlying claims to jeopardize what could possibly reach the umbrella. So there are markets. It's a little bit more work to get there, but it can absolutely be done. And we do have a few competitive markets for umbrellas for higher limits than 1 or 2 million, but they just ask for a little bit more.
Okay, great.
Yeah.
We have a couple of questions still going back to the renter's insurance. So
Okay.
revisiting that, what amount should you require a tenant to have in that renter's insurance?
Uh, Good question. I would recommend $100,000 in liability coverage. I think that's a good amount. It's not that much more to have that limit. I think the lowest, and again, I'm not on the personal line side, so things can change, but because standalone renters policies are on personal lines, and that could change. But I think the lowest is probably 50,000. That's the lowest limit. But the difference between 50,000 and 100,000 in liability is not much. It's maybe $5, $10 a month. I mean, it's very low. So I would recommend 100,000, and then they can cover however much of their personal property they want. So that part's really up to them.
Yeah, ultimately it does benefit them as well. So
Yeah. And
yeah.
again, and I just saw that pop up. Yes, absolutely have them list your entity as an additional insured to clue you in as to what's going on with their policy.
Yeah,
So if it's canceled, you'll be notified.
Patty had a good question about that. So she says, if you are put on as an additional insured and there is a claim, does it in any way affect your insurability?
Uh, no, not necessarily. It again, it's very situational. It depends on um on what's happening. Why did it happen? What occurred? What was the reason for it? But it won't necessarily make you face an increase. It really does depend on what
Okay.
happened. But yeah.
Got it. Another question, you mentioned the green initiatives that could be used to reduce your rates. Do you have information or like a PDF or slide that insurance companies are recognizing?
That's a great question. And it depends on the carrier, but I will make a note
Mhm.
to see if there are any standard ones, like things like solar power and tankless water heaters, that kind of thing, that carriers will overall give discounts for. I know a lot of it is building materials themselves too.
Yeah.
So, but as far as a breakdown of what is considered for discount, I will absolutely look into that and then shoot you an email with it as soon as I find
Yeah,
something.
yeah. He asked about solar panels. I know that's a popular add-on
Mm-hmm.
for many apartment owners. There are even some tax incentives for doing it.
Mm-hmm.
And potentially, depending on the insurance carrier, it sounds like you could maybe get some insurance breaks as well.
Yeah.
So definitely good to know. Thanks, Lauren.
Yeah, I'm writing that down to do.
Great. All
Okay,
right.
perfect.
Let's see. Nancy had a question. My insurance company for 20 years is not renewing. They are
Hmm.
holding my claims at my personal property against me. I had the policy for 20 years and they are only looking at the past 3 years. I had 2 claims during that time and none prior to that. it doesn't give the correct picture of claims if you had 2 in 20 years and one was on my personal home for a roof replacement. I suppose that makes me look like a higher risk. Will anyone look at the entire picture, not just the last couple of years? Also, they require a 4-point home inspection with wind mitigation.
I
That
assume you're in
sounds
Florida.
intense. Yeah.
Yeah. And honestly, Florida is the toughest insurance market in the country. And it has been
Yeah.
for a while, but it is getting worse.
Mm.
Uh, it's very bad. And that's probably not something that is news. But when it comes to something like that, uh, and I'm gonna just guess, and I could be wrong, but these are due to storm claims. The storm claims in Florida have been so astronomically awful the past few years that going back 20 years when it comes to something like a storm claim isn't really going to help carriers know what's going on today. So if it's something that's a newer development like storms, which are still very hard to predict as far as the amount of losses and claims coverages that occur, it's the most recent 3 years is the most accurate data of what's going to happen in the next few years. So if that's the type of claim it is, we can absolutely still go to bat for you and approach, see what's going on. If you have a renter, if you have a policy for your like a rental property, it's just one rental property, and if it's, especially if it's under like an LLC or a different entity that owns your primary property that you live in, then there's a distinction between the two as far as ownership is concerned. So looking at just the loss history for the rental property is what we'd want to do.
Mm.
So that's certainly something to consider as well.
Yes.
Now, yeah, and it's just, Florida's just a hot mess, right? And it has been for a while with the issues with the insurance commissioner in Florida, and then the storms and everything. A lot of carriers, of course, have pulled out of Florida, and if you're unable, if you are being non-renewed in Florida, yes, there are still options, and yes, they are very expensive, but
Yeah.
that is unfortunately just where we are in Florida. It might be best to go to Citizens, to go through Florida and get quotes that way.
Yeah.
You know,
Yeah, and the George here, or Jorge, he was saying also that he thought it was because there's just fewer insurance companies in the Florida market, which is also obviously
that's
true as
also a
well.
yes. Yep.
So that's a
Yep.
factor. And another comment here, I thought insurance carriers can't cancel or not renew based on a like act of God, class loss act of God. Can't in Texas, he says. He must be in Texas. So I mean, I'm not
Well,
aware of that, but maybe you know something about that.
they can. You can still, they can non-renew you or jack up your premiums as long as it's within the legal time frame of allowing notifications to go out. That
Mhm.
they can non-renew you based on really anything they want, within reason. Now, if you have a lot of storm damage, then yeah, that's a legitimate reason to them, even though of course I know it's their job to cover the claims, but to them it's also a legitimate reason to get off of a policy. So yeah, I mean, I haven't heard of an act of God being something that they can't cancel you for. They cover you for it, but they can definitely cancel you for it. I mean, a lot of clients will get non-renewals because they had to face a large claim that paid out because
Wow.
of a storm.
That's
So
unfortunate.
yeah,
Yeah, I think someone had mentioned earlier they're just frustrated of like, why is the insurance
I
industry
know,
like this? Like, it just
I
is what it is,
know.
I suppose. And we're
Yeah,
doing the best we can.
yeah, and I hate it because I'm a messenger. I don't make the
Hmm.
rules. I probably would not be great at running an insurance company because I agree with you guys more than I agree with insurance carriers. I would not be profitable. But insurance company, I mean, it is a business, unfortunately. And that is good and bad, because in order to pay out claims, they need to make money. So they need to make money to pay out the claims. And it's just this circle of, well, if you're going to make a lot of claims, then we need to increase the premiums to pay for the claims and to pay for everything else that comes with running a business, and also making profits. So it is kind of a vicious circle, because I trust, and I've had to face insurance claims too. And I'm like, I'm in this industry, and it can be a pain. And
Mhm.
we're certainly not immune to facing that. But I do
Yeah.
understand it is very frustrating, and there is a lot of red tape, and especially right now, there's just a lot of issues that we have to work around, and do the best that we can to make sure that you guys are properly protected, because these are your investments. We want to make sure that we're doing everything that we possibly can to make sure you guys are protected in case something happens. So
Yeah, and I think, this goes well with Ted's question, and maybe we can close up with that. I think there's just a few more questions, but
sure,
maybe we can answer those
whatever you guys want.
offline. With Ted, realistically, in the next few years, do you think we'll transition out of a hard market into one that slows down or stops these high premium increases?
Yeah, and that's the whole thing with the cycle. It is a fluctuation. It's a hard market, then it's a soft market. It's just like any sort of economical cycle, that um, uh, that it's that it will ebb and flow. Now, in the next few years, yeah, as long as people are cognizant as to what they're claiming, and taking care of their properties, and doing everything within their ability to take care of the properties and the tenants, and keep them in good condition. And you can only control so much, but as long as that happens, I think that the outlook for the multifamily industry will be better in the next couple of years. I don't think it's not going to be this year, and it's probably not going to be next year. But that doesn't mean that products won't be developed, or we know things now this year that this time last year we didn't know. And so things always change, and that's why it's good to work with an agency that keeps their pulse on what's going on, because things can change.
Yeah,
So
absolutely.
yeah.
Okay, well, we'll wrap it up here. If we didn't get to your question, I will be sending all the questions to Lauren regardless,
Yeah,
so she
please
can
do.
follow up more in depth with you. Also, we do have a webinar coming up next week about keyless entry, the smartest decision you can make for your property this year, which, that helps with security and all. If you want to come to that next week, I'll send an invite as well in the email. Also, we did record all of this. We are going to be sending that too, and PowerPoint slides. Thank you all for being just so
Yeah, thank
engaged
you
and asking
guys.
so many great questions. I think for those of you who are still on, you really are troopers staying on this long, and
Thank
you
you.
you
Yeah.
really want to learn. That's awesome. I love seeing it. So yeah, we'll put you in touch with Lauren. A couple of requests for resources came in, so Lauren and I will
Yeah.
get together a few things that maybe can help you a little more, just to have on hand. And hopefully you'll get a consult from Lauren and her team at some point when you are shopping, because I do think, we've seen a lot of great stories from our members, people who have done consults and realized that they're saving now a lot more money, or maybe that they did have a good policy. So it's always good to know, where you stand. So thank you all for
Absolutely.
staying on. We really appreciate it. And thank you so much, Lauren, for your time and your expertise as always.
Of course, thank you. And I'll do my best to get the other questions answered. Might take me the next couple days just to read through
You're gonna
everything,
have
but
some
I
homework,
will.
Lauren.
That's fine. I'm here for homework. This is I'm not complaining. But if you don't, you have my email address, so please feel free to reach out to me. I'm always happy to help. Even if you guys don't want quotes now, if you just have random questions, I'm here to help,
Love it.
regardless of whether or not we work together. So
Great. All right,
yeah.
everyone, have a wonderful day. Until next time.